What is up, YouTube? Welcome back, guys, to another post-trading analysis video. And man, oh man, we have been absolutely nailing the charts. We've been absolutely smashing it and netting over 9% in a single trading day. Like you show me someone that's netting over 9% in one single trading day with proof, right? It's been absolutely insane. The opportunities are literally endless. Like you show me an altcoin pair, I show you a Wyckoff today. Like it's absolutely amazing. And like I started this YouTube also as YouTube just being my own personal journal because me going over the trades at the end of the day every single day, explaining my thought process also makes me a better trader. But it's always nice to see you guys catch on the info that I'm giving you because I've been getting tagged in multiple posts a day of people posting Wyckoff schematics and winning trades, even with proof, and I just love to see you guys succeed with me, okay? Because giving is the biggest fulfillment a human being can get. Trust me, you can have all the money in the world and you will still not be fulfilled. But if you give, you will be. So I love seeing you guys succeed with me. And it's not just that I'm giving you guys Wyckoff schematics and I'm teaching you how to, or I'm basically giving you guys the blueprint on how to use it to become profitable. It's also that I'm giving you guys hope. Because the world today is set up in a way that it's almost impossible to escape the 9 to 5. It's almost impossible to make it. Like, cost of living is absolutely through the roof. It's absolutely through the roof. I don't know how people sustain a living if they have a family and they have responsibilities. Like, I'm a young guy, right? I'm a young guy and I don't have a family yet, I don't have that much responsibilities compared to someone that has kids and that needs to provide and needs to put food on the table, It's been almost impossible for these people to make it out because the older you get, the less risk you can take because the more responsibilities that you have. And me showing you guys that trading can be easy. It can be easy if you know how to look at the charts correctly. And then it can be easy. But the TA can be easy. Obviously, it requires mental toughness and trading psychology and good trade management, which will come over time. But I'm giving you guys hope that you can actually make it in trading. You can actually make it in trading. You just need to put the work in, okay? You need to put the work in yourself. You need to put the hours in because experience is key in this game. But I'm giving you the blueprint on how to look at the charts and what to use as your entry confirmations. And if you just stick to trading and if you tell yourself, I am going to make it in trading, no matter how long it takes, I would rather learn trading in a span of 10 years, knowing that I will become ultra profitable over that 10-year period or after that 10-year period, and then live comfortably the rest of my life, then quit trading, go to uni, study, go in uni debt, having to work, buy a house, pay off your mortgage, and basically working for a boss the rest of your life, being in debt and having 2 weeks of vacation a year. Like, what would you rather have, right? Because you can make it in trading if you put your mind to it. It doesn't matter how long it takes. Eventually, you will make it. And then the rest of your life, you will live comfortably. So I'm giving you guys hope. And trust me, guys, from my experience, I'm not bullshitting. Like, you're seeing me execute it every single day and showing you that it's possible. Okay? So take it from me. I was once an unprofitable trader. Literally, I was you guys not even that long ago, right? It's just that day by day, you may not see the results, but year by year, you will. And then there will be a moment in time when you're trading and you're like, holy fuck, I'm not losing. I'm making money. It will not be like a switch, It will not be like a switch of all of a sudden you're making $1 million. No. Over time, you'll see the money rolling and you're like, holy fuck, am I actually doing it? Am I actually profitable? and you will become profitable without you even noticing it. So enough yapping for me. Let's get straight into the trades. We had a trade on Pepe. We had a trade on ETH. I always like to build some context. We always build context. Now, Pepe has been smashed down quite hard. Overall, we have been in this weekly uptrend right here, making this your very important weekly market structure low. But overall, we have been smacked down pretty hard. Yeah, we have been smacked down pretty hard. And the most ideal place in the beginning for me to have a bounce was right up here on this daily demand mitigation. And we got the bounce, but we went lower, right? And then we shorted the Model 1 right here. But there's not that much support on the left. Like, I was looking at the POC for a while, where the POC was right around here. So I had this demand zone on my chart, which was backed by some volume. And we kind of wicked through it, which is totally fine. Take the liquidity from the block. But there's not really that much demand below us. And I wouldn't even call this like very good demand. Like, it's some sort of demand, and that's obviously why we're getting a bounce right here. But overall, like, I don't like the area where we are, Like, for me to confirm like a high time frame bottom for a rotation all the way back up to like the all-time high, we would need to have like an extended accumulation or something curling up, because otherwise I wouldn't know where the bottom would be, Wouldn't know where the bottom would be, because from a demand perspective, there's not that much. It's basically just liquidity, right? Basically just simple liquidity right here. So knowing that we're kind of in a sketchy area on Pepe, we just need to follow our market structure, okay? We need to follow our market structure. So our most local important structure is our structure from the top down, right? So from the top down, we're basically having lower highs and lower lows. This was an SFP, and then again, lower highs and lower lows. So obviously, when we come into this massive supply zone right here, we can expect, just using general market structure rules, a lower high for yet and again a lower low. Now, mind you, market structure does not continue itself that easily for so long, After a while, you will not have clean market structure, and you will have some sort of range, where this just starts to become your new range, where you're going to have many internal rotations before you potentially grab an extreme point and accumulate from there or distribute. But market structure can only continue itself for so long before it gets exhausted, and then we need some sort of range to gather more liquidity before having either a reversal or a continuation towards the downside. So overall, market structure was trending down. This was our market structure high right here. And we were looking for a lower high, right? It's simple as that. We were looking for a lower high in this area. Now, obviously, we can refine it down of where that potentially lower high could be. And right here, you have some wick supply, and that's exactly where we tapped into. Now, mind you guys, I would have never had this wick supply on my chart just as a potential zone that we could bounce or we could reject from. The only way I had that wick supply on my chart is because we went into that supply having a distribution, therefore making it some sort of area to watch, okay? I was just watching the distribution. I was not putting any importance on that we were rejecting from that supply, but it's always nice to see that you reject from some supply, okay? Now, we know that to get from point A to point B right here, you need to have some sort of upward structure. So our structure from the low up is making higher lows and higher highs, just like this, okay? Higher lows and higher highs. Now, in a local uptrend, how do you pull your range? In an uptrend, you pull your range from top to bottom, okay? In an uptrend, you pull your range from top to bottom. So we can see right here, initial range high, initial range low, confirm the range, okay? From there, we started deviating the range high right here. Deviation 1, tapping into that supply zone that we just talked about, okay? Which is literally, it was just wick supply. Like, sellers definitely stepped in here because look at the dump that was caused after this bearish candle, right? Very aggressive move towards the downside. So it was some sort of a supply, but nothing really significant. But we had our range high, we had our range low, and we came up and we deviated our range high. Let's extend this now to the new high right here. So when you have deviation 1, immediately bells should start ringing of, hey, we can have a potential distribution in the making, okay? We can have a potential distribution. Now, I was looking at either a model 1 or a model 2. At this moment in time, I wasn't sure yet. We broke structure from the low up here, so that could be a reason why it was going to be a model 2. And then the way we came down right here, we left some liquidity above, and then we had this 5-minute order block with imbalance. So I was initially watching a potential rejection in this area for a model 2, where it would be a 1, 2, and a 3 right here. The thing is, you never confirm the model 2. Because if we look at our structure from the low up, we are simply just trending up with the higher lows and the higher highs. So even though you were expecting maybe a model 2 in the beginning, since you broke structure here on the left, the model 2 never got confirmed. So you could have never gotten trapped shorting this model 2 because there was never a confirmation for it. So what this price ended up doing, we wicked the high one more time, indicating a potential Wyckoff Model 1 distribution, okay? And it's not just a random Wyckoff Model 1 distribution. The tabs and the distance between the tabs and also the heights between the tabs are really nice, you know? You can clearly see that it's very clean looking 30-minute structure, where also this deviation right here, this whole area is bigger than this deviation, okay? This is just a wick. This was kind of more a bigger deviation, having like 3 candles above it, 4 candles above it, versus just a wick. So we can see valid, clean-looking 30-minute structure with the deviations getting less and less, coming into a macro area of resistance because, you know, right here we can put in that lower high for the lower low on the 1-hour time frame. Okay, so we came into a macro resistance POI where a lower high would make sense. We're seeing the distribution. Now we just need to wait for the confirmation to short. Okay, so how do you confirm a distribution? You confirm a distribution if you break the market structure between tab 2 and tab 3 back to bearish, meaning this is your tab 1, this is your tab 2, this is your tab 3. What's the lowest point between tab 2 and tab 3? Right here. Now you measure your market structure from the low towards your third tab high using the 6 candle rule as explained in the tutorial of the Wyckoff tutorial. And then you have a higher low and a higher high right here. Boom. Okay. So this was your low to break. This was your low to break right here. Break that low, and your distribution is confirmed. Okay, so break that low right here. Break that low right there, and it is confirmed that price will come to X marks the spot, which is the range low, okay? Making for a very nice risk to reward trade. Now, mind you, I did not wait for this low to be broken. You may be like, why, Lars? Why? Well, if you look closely, okay, what do we see right here? What you see in that area is its own little Wyckoff range. Yeah? Right here, you have your own little Wyckoff range. So if I go on a lower time frame right here, okay, if I go on a lower time frame, what you can see right here, if we neglect the breakout structure, we're going up, you know, just like I discussed earlier, we're trending up. In an uptrend, right, we pull our range from top to bottom. And what can you see here on a lower time frame? On a lower time frame, you see 1, you see 2, You see 3. A potential model 2 distribution. This is your range high. This is your range low. That's deviation 1. A third tap of a model 2 distribution needs to grab either all liquidity, extreme liquidity, or mitigate extreme supply. This right here was your extreme liquidity, okay? That right there was your extreme liquidity. Why is that your extreme liquidity? It's basically like the last high, almost the last wick high prior to taking the second tap. You have one here, but that's so close that if you take that high, you're probably taking the second tap high as well. So kind of using like 30-second structure, it will look something like this, making you know that 30-second market structure high, your obvious liquidity point. Now, you may ask, why is this not a deviation, a 1, 2, 3 like this? That could be, but for a deviation, you need valid structure, right? So if this was a model 1, this needed to be valid structure. And this is not valid structure because you only have one candle going down that created the low. And for valid structure, you need at least 2 candles going down. And that's why this deviation doesn't count, okay? So this is just one move up. One move up because this was not a valid pullback, making it not a valid deviation. It's just part of this entire move up, okay? So right here, we grabbed extreme liquidity, meaning a potential model 2 distribution could be in play. Again, how do you confirm the distribution? This is tab 1. This is tab 2. This is tab 3. This is the lowest point between tab 2 and tab 3. Now we measure our market structure from the lowest point up towards the third tab high using the 6 candle rule, and you get something like this, making this your market structure low. So whenever you break that, this local distribution is confirmed, okay? So where I entered, guys, is actually right here when you broke that low. You wicked it first, so whenever you wick it and you have a move off the wick, I like to extend my market structure low to the new wick low. So right here we had the break. Stop loss can go above that third tap high. And yes, normally with a Wyckoff, you target the range low, but this is where context is key because we know if we break the range low, okay, if we break the range low, we can have a rotation all the way down to the macro range low right here, giving us a 9 RR trade. So what I did is I entered 50% of my position right here, and then I entered 50% on the range low break, giving me an average entry of around here. Okay? Average entry of around there. So this is a situation where you can see Wyckoff within Wyckoff. Yes, that is a thing, and it happens all the time. That's what something I wanted to go over in I want to talk about in my advanced Wyckoff video, the advanced Wyckoff tutorial part 2. And it's simply just when you have Wyckoff and Wyckoff. So we had a macro. We just delete all these things now. So we had a macro model 1 where this high right here had its own little Wyckoff model 2. Okay. And just because you have the Wyckoff model 2 here, you can actually pre-enter before having that main market structure break. And it just gives you that extra juice, okay? Now, the way I made almost 7% out of this short is because of trade management, okay? So I entered right on this market structure break of the local Wyckoff, and then I entered the rest on the primary break of the range low right here. But what I did is that what happened since then, since trade management is very important, we left behind the supply zone, okay? We left behind the supply zone, and it's a very nice supply zone because that was basically that move up right here being part of the distribution schematic before dumping price lower, clearly indicating that in this buy to sell, seller stepped in right here, pushing price lower, being part of this massive Wyckoff distribution schematic, indicating if price comes back to that price point, the sellers will protect their position and push price lower. So what I always tell you guys is that after a break, okay, I've told you this, guys, many times. After a break of structure like we got right here, after a break of structure like we got right here, and you see price after the break slowly grinding down like this, leaving loads and loads of liquidity above, all these local wick highs being lower than the previous one, leaving a massive trail of liquidity. When you have a Model 1 with a break that's looking like this, that's slowly grinding down, what can you expect? A pop up, right? I tell you guys this all the time. When you have a break that's slowly grinding lower and lower and lower and lower, it likes to pop back up, grab all these stop losses, that are shorting very late, mitigate the only supply remaining, and then push price lower. It happens all the time, I think I even have that example in the back of my mind of Sol. I think I explained to you guys on Sol. I think it was right here. It was right there, I think. Yeah, there it was. Okay. So what did we see on Sol? On Sol right here, we saw the kind of the same thing happen. You had your range high, you had your range low. You had deviation 1, you had deviation 2. Each deviation being higher than the previous one, indicating a Wyckoff Model 1 distribution schematic. Okay? Now. Whoa. Okay, bit of lag there. We're all good. Now, what happened right here is we got the break. Okay? We got the break. So right on this break, that confirmed that price was going to come to X marks the spot, or not even X, circle, range low, okay? However, after the break, we slowly started to grind down and slowly started to grind down. You can even see it better on like a lower time frame. Look at that. Look at this slow grind down. If I delete my drawing tool, you can clearly see that we have a massive trail of liquidity because each high is lower than the previous one. Okay, so you have this high right here, this high right here, this high, this high, this high, this high, this high, and then you just, what happens when you have a break that has this slow grind down? Well, this is where it started, and look what happened. You get that pop back up, squeezing everyone that entered late out of their positions before you dump price lower. Like, this is a very typical phenomenon, especially in the Model 1. It happens in a Model 1 because in a Model 2, your third tab already does that. So in the Model 2, your third tab already grabs all liquidity. It doesn't need to be that way in the Model 1. And you can kind of call it like a Model 1 that maybe goes over into a Model 2, But this is a very typical phenomenon, that V shape that just then dumps down. So applying that to Pepe, that's exactly what we got. So when I saw that slow grind down, I was expecting price to have that pop-up effect, especially because we left very good-looking supply remaining. So the moment we come back up and we mitigate supply, now there's no reason to go higher because liquidity has been grabbed and supply has been mitigated. So when all the liquidity, when all the buy-side liquidity has been grabbed and all supply has been mitigated, where will price most likely rotate to next? The liquidity below and the demand below, okay? Crypto coins love to move from liquidity to liquidity. You grabbed all the highs, you grabbed all the buy-side liquidity stops right here. Now you only have sell-side liquidity at the lows, and that's why you have to move down. So what was even more perfect is that the moment New York opened, we got that push up. So the blue candles are the London, is the price action during London. And then right when New York opened, you got that move up. And literally the first move on New York is always a fake move. Like, it's almost always a fake move. So New York opened, you got that push up in supply. And I literally said, expecting a lower high right here. And when did I confirm the lower high? Well, for that, we just use basic market structure rules, okay? So we got the break right here. We got the break of structure right there. Now, expectational order flow is a lower high for a lower low. When do I know this is going to be the lower high? If we break market structure from the low up, right? If we break market structure from the low up and that breaks back to bearish, we can make that black to visualize it better. When you break your black market structure drawing back to bearish, that will indicate that the lower high on the red market structure drawing is in. So the moment we broke this low right here, We can get rid of it now. The moment we broke that low right there, this lower high was confirmed. Mind you, my stop loss was initially here. So what I do is I trail my stop loss to that new high because there's no reason to come higher. All supply has been mitigated. There's no liquidity above, and we just broke market structure. So there's no reason for price to come back to visit that high again. So when I'm risking, let's say $100 on that stop loss placement right there, and I'm trailing it down, now I'm only risking about $50, okay? So what I do is I add the margin back, so this becomes a $100 risk trade again. And it's just this slight, it's just this slight skill in trade management that improves your RR so much, because that would mean I added more here while also being short from there, but I'm trading my stop. So in those scenarios, you can like increase your position size in a valid way while risking the same, making your risk to reward even better, right? So that's what I did, and I ended up like nailing like 7% plus on this trade, and I'm still have a position open, okay? So obviously the target of the distribution is the range low, but I was just telling you guys about, context is key, and we could potentially put in a lower high for a lower low here. Now, I'm not aiming for a lower low. I'm aiming for around here, in this area right there. That's for me enough to cash out this short. So I still have position running. If that gets hit, I make around 10%, so that would be juicy. But yeah, it's just beautiful. It's absolutely beautiful behavior on Pepe. Very clean. Very, 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 very clean. Even having that nice little return to zone here. Beautiful, guys. Absolutely beautiful. So that was the trade on Pepe. And I want to keep these videos 30 minutes long, but I was yapping in the beginning. So on Ethereum, I'm going to keep it a bit more short. So on Ethereum, we have the exact same. Okay, on Ethereum, we have the exact same where we're making lower highs and lower lows. Again, lower highs and lower lows. Now, this was a very nice supply zone. We didn't get in there, or we didn't tap into it. But again, if we measure our structure from the low up right here, you have some sort of a uptrend. Okay, let's make that red. In an uptrend, you draw your range from top to bottom. So that's exactly what I did right there. This is your top. This is your bottom. Okay, and then you got your deviation 1 right here. Okay, deviation 1 is like a 15-minute deviation. There you go. Deviation 1. And what happened after deviation 1? Look at that. After deviation 1, we left such a massive liquidity trail. It's not even funny. Like, this is just liquidity after liquidity, right? All these highs being lower than the previous one. Massive trail of liquidity. What happens? Price pushes back up, grabs extreme liquidity, which is the requirement for a Model 2, and then breaks structure back to bearish. Because what do I always say? The moment, or what do I always say? This is your tab 1, this is your tab 2, this is your tab 3. What is the lowest point between tab 2 and tab 3? Right here, you measure your market structure from the low up. I'm going to skip past all these first points and just use the most local ones because those are the most relevant, right? But you can also start from here. But right here, this was your 3-minute structure. So that was your more risky entry, but still totally valid. This would have been the more safer entry to use the black market structure drawing, okay? And then when you get that break of structure, aka confirming you're breaking market structure from the low up, that's when you can enter, okay? So let's say you entered on that break right here, or even this right here. You got the mitigation right there. You entered, you put your stop below or above your third tap high, and then you target the range low, okay? For a nice 2.4 risk to reward. Mind you, again, also this can go lower, which it's currently doing. Because if you lose the range low, this could be a lower high for a lower low on your black drawing. Why? Because if we apply this market structure rule, this broke back to bearish right here. So your red market structure drawing is your structure from the low up. When your structure from the low up breaks back to bearish, that confirms that the lower high on the black market structure drawing could be in. Okay? Again, yes, we could have a rotation back to here because you have these highs, but I'm expecting a bigger range to form right here, where this is just your range. Damn, why the fuck are these people spamming me? I don't know if you guys can hear all the notifications. Okay, I turn it off. Okay. So I'm expecting this to be our new range. So I would target, around this area, maybe even these lows. That will be good enough for me. Okay. And yeah, this was also shared in advance in Discord. So absolutely nil the charts. I cashed out right around here. I have a small position running, but nothing significant. Just more position to be a bit more hedged. Okay, be a bit more hedged. So yeah, at the moment in time, right, you don't know if it's going to be a Model 1 or a Model 2. You just don't know. But your structure confirms it. So when you break structure, you know that this third tap was a lower high, therefore a Model 2 distribution, and you broke lower. Okay? So Model 2 distribution on Ethereum, and then Model 1 distribution on Pepe, where we had, that local Model 2 distribution to confirm our entry prior to breaking our primary market structure. And then based on good trade management, we can trail our stop loss down after mitigating supply and breaking structure, but add our position back. So we still have the same amount of risk and our return would just be more. Okay, so just a sneaky little way of properly executing a trade and managing risk. And yeah, that was it for me today, guys. I want to keep these videos around 30 minutes. Otherwise, I just start yapping too much. But Model 1 distribution and Model 2 distribution. If you want to understand Wyckoff better and you're watching this video without having watched my Wyckoff tutorial, definitely go check that out, guys. It's like 3 videos before this one. Come on now. You need to watch that video because then you can follow me so much better during these post-trading analysis videos, because I do explain Wyckoff in detail in these videos, but I don't go over every single detail every single video, okay? Because that would just take way too much time. So for more information, go check out the Wyckoff tutorial I have on my YouTube. You can just find the title and watch it, and I'll see you guys. Oh, before I forget, guys, I'm going on a boys trip. I'm in Spain right now by myself. Got a little place here, but I'm going on a boys trip, and I will be gone till the 13th of August, okay? I will be gone till the 13th of August. I'm going on a 5-day boys trip, partying, going crazy. Yeah, just literally just boys being boys. It's a tradition. So I will not be posting a post-trading analysis until the 13th, okay? So I will be missing you guys, and I see you guys in 5 days. Peace out.